Hello, everybody. This is Hyperwave. I'm Leah Wald here with Tyler Jenks. New office situation, so thanks for understanding the little bit of a delay here. And today we are going to talk solely about Gbtc and specifically from a money management perspective. Although pretty much Tyler's going to cover everything Too Long Don't Read in the Edgar report, although actually we do think that you should read it. So yeah, any and all questions about Gbtc, this is the show for it. So I'll definitely be monitoring the live chat, but we're going to try to make this as comprehensive as possible so that forevermore, everybody is going to know everything about Gbtc and feel like an expert on not just understanding what it is, but also how to trade it if they'd like. So Tyler.
Hello, everybody. Thank you for tuning in. This is a very important topic for a couple of reasons. The biggest reason is this is the only way to get exposure to Bitcoin in retirement accounts. And I'm going to spend 5 minutes explaining why that's so important. At a later date, I fully expect an ETF to come out that will exactly mimic Bitcoin prices as opposed to Gbtc, which doesn't in any way mimic Bitcoin prices because of the premium discount problem. But we're going to go into that in a lot of detail and also explain the quick way of calculating the premium for those that don't know how to do that already. We've been getting a lot of questions about that. But you should be doing all of your trading and all of your investing and all of your speculating in a retirement account, regardless if it's Bitcoin or anything else. First and foremost, if you don't have an IRA, a regular or a Roth IRA, and if you don't have a 401k, and if you don't have a 403b or a 457 or a 459, all those funny numbers are simply IRS regulation numbers. And in each one of the IRS regulations, it explains each one of those, the IRAs and the 401ks and all of that stuff. Certain people can have certain ones. Everybody can have an IRA. And if you don't, regardless of how old you are, if you have any income coming in at all, that's the first place you should be funding every single year. Now, if you've got financial planners or accountants or tax consultants or whoever, or if you already know about all that sort of stuff, it's very easy to miss how powerful they are. And so I'm actually going to do a short personal finance session right here before we get into the Gbtc details. Remember that in cryptocurrency, you can't put any of that. You can't put Bitcoins. You can't put any of the cryptocurrencies, Ethereum, anything else into a retirement account. But you can put securities into a retirement account. I'm not going to go over the details of why or how. It's just that it's ruled by a separate set of laws called ERISA laws that have to do with employee retirement accounts, all the way back in the 1970s with a lot of variations and changes along the way. But it is such a powerful tool. The reason it is such a powerful tool, and if you have money in a trading account, or if you have money in an investment account at E-Trade or Fidelity or Schwab or Pershing or any place, you should take that money out and put as much as you can of that money into a retirement account, an IRA. You missed if you did miss the April 15th deadline, then go ahead and do it anyway for next year. You'll get credit for it. And what you put in it becomes a credit against your taxes, number one. But number two, and most importantly, it's the only gift the US government has given you. They've taken all the other gifts away in the form of tax breaks. They're considering taking away the tax breaks on mortgages, but even those are difficult under new tax law and state laws and other things. But it used to be 25 years ago that there were 100 different places that you could put your money and get huge tax credits. And they all went away in the 1980s and the early 1990s. The only thing left were retirement accounts. Now, if you're working for a corporation, you might have what's called a defined benefit plan. And you don't get to control that, the company does. But if you have a defined contribution plan, you get to control it. Now, a lot of people just say, I don't want to tie my money up in something I can't get to. That is not the way you should be thinking about this. If you've got $50,000 in any one of those retirement accounts I just mentioned, and you put it into Gbtc because you think that cryptocurrencies and Bitcoin are going to do very well. And let's say you were right and you end up doubling or tripling or quadrupling your money, which is very easy to do. We did it in a matter of 3 or 4 months at the end of last year, running up till December, doubled, tripled, quadrupled the amount of money in retirement accounts. And we didn't have to pay any taxes on it. You didn't have to declare it, even if you sold it. And with Gbtc, from time to time, they pay enormous dividends, and I'm going to get into the details of that. You don't have to pay taxes on those. You don't even have to put it on your tax forms. They compound year after year after year after year, and it's not taxable. It's only taxable when you take it out 10, 20, 30, 50 years from now. And there's all kinds of techniques that when you take it out, you can minimize that almost to nothing. We're not going to go into all that kind of detail, but I want to show you over even a 15-year period, the difference between what you are doing now in a trading account or an investment account that is taxable and one that is not. So to do that, I'm going to just quickly go over 3 or 4 slides from a presentation I'm giving to a corporation later this week. And I'm going to steal some of the charts because they happen to be pretty good. So the first thing we're going to do, even though you didn't sign up for this when you came on to today's podcast, you thought we were just going to look at charts of Gbtc. The first thing we will do is pull this up. Can you see that?
Ty, you're looking at me.
What's that?
It's of me.
Okay, let's try it again.
All right, you guys get me for a little bit until Tyler figures this one out.
Yeah, we've got kind of a complicated setup here today. Okay, so let's go here. Let's go here. Let's go here. Let's go here. Let's triple.
You're ready.
Triple click on this one.
Bing, bang, boom.
And then stand on my left foot for 3 seconds.
Bada bing, bada boom.
Bingo.
Bingo, bingo.
Okay.
You're locked and loaded here.
Okay. What you're looking at is just an example of two people, after tax and pre-tax. After tax means that it's in your investment account and it is not in a retirement account. The first person is Albert. He allocates $0 this particular year into a retirement account, a 401k. His paycheck is taxed at 35%. He puts $11,500 into savings out of his paychecks during the year. This equals $18,000 in pre-tax dollars. So out of the $18,000 at 35%, you got $11,500 you can put into savings. You can take some of those savings, put it into an account at E-Trade or Fidelity or Schwab, and then start trading on it. In the second example, Peter allocates $18,000 a year to his 401k. His company matches it up to a certain percentage, in this case, $12,000. Peter puts $30,000 into savings, the $18,000 and the $12,000, and this equals the same pre-tax dollars that Albert put in. So we're looking at two people, same salaries, same taxes. One of them can put $18,000 in pre-tax dollars. The other one puts $18,000 in pre-tax dollars. And now let's see what happens. And what happens is, after tax grows to $500,000 in 15 years. Pre-tax grows to $1.2 million if they both invest in exactly the same thing in 15 years. After tax, you don't have a retirement account, $500,000. Pre-tax in a retirement account, $1.2 million. That's just in 15 years. Most of you will be trading these accounts for 20 or 25 or 30 or 40 or 50 years before you have to get into it. So here at retirement age is what happens. Peter's got 2.3 million more than Albert. Peter's got almost $4 million in his account. Albert's got less than 2, about 1.8 million. So the point of that is, and it doesn't matter, you know, you can look up a million different pre and post tax compounded charts on Google, and you'll find these charts and a bunch of other ones. So the reason I want you to get that squarely in your thinking, because it's just too easy to forget and too easy to ignore. You come up with too many excuses why you can't or should not do that. They are all incorrect. Every one of them. This is the most powerful tool you have as an investor. You can blow away any investor in the world, the best mutual fund managers, the best institutional managers, by this simple thing, even just putting it into savings, as opposed to even trying to invest it. It's the compounded rate of return pre and post tax. Please don't forget that. All right, we're going to go back off of screen share, and we are going to get into Gbtc. And first of all, we're just going to talk a bit about it. We've given you a link to a very lengthy document. It's a government document that GBTC had to file with the Securities and Exchange Commission. It's called a disclosure document. And I think this one's 80 pages long. I've read it 2 or 3 times before I started doing anything with GBTC. You need to read it if you're going to be into GBTC. It will scare the willy out of you by the time you get to the end of it, and you'll say, there's no way in the world that I would ever invest in this thing. That's what that form is supposed to do. The difference between cryptocurrencies that have gone through an ICO that are probably securities is they have not had to file that document. GBTC had to, and every IPO, every stock, every corporation must do the same thing. Every hedge fund, every real investment needs to do that. And that's why there's such a debate about the SEC and the CFTC over ICOs. And you can draw your conclusions. We've drawn our conclusions about which ones are real and substantial, Bitcoin, and which ones aren't, all the others. Draw your own conclusions, but read this document if you're considering or already trading GBTC. And once again, if you're not doing it in a retirement account, you're missing out big time. Please consider it. Okay. Now, in that disclosure document, you will learn all of the people, all of the institutions involved in the trust. You will learn everything about what can go into the trust, how it goes into the trust, what happens when there's a fork in the trust. Like with Bcash, there was a big fork, and GBTC received a huge amount of Bcash, which they will not hold. They will sell it off at what they believe to be proper prices at the proper time, and you end up getting that in the form of a dividend. It just comes to you in cash, into your account at Schwab or at E-Trade or at Fidelity or wherever, in a retirement account or outside of a retirement account. If it's outside of a retirement account, it's a dividend, and you're going to have to pay taxes on that dividend. Okay. So after this is over, take your time, but please go through that document, because many of the questions that you have that you ask us and others will be answered there. And but as I say, it's a scary document, but it is simply boilerplate with answers the same as every other stock and every other corporation and every other legitimate investment must file. And you can get it on any company that you want to at any time, just by going to the same place that we went to send you that link, either Edgar or the SEC. Very easy to do. I asked Leah to do it, and 30 seconds later, we had the document. So very easy to do. Now let's talk about GBTC. If there were 20 different securities already on the market that would give you exposure to Bitcoin and crypto, Bitcoin specifically, this would not be the one you would want to pick. But it is not. There is only one security that has been approved by the Securities and Exchange Commission, and that's the one we're talking about today. And it also, because it was approved by the Securities and Exchange Commission, is allowed to go into retirement accounts and automatically gives you that advantage that you can make a huge amount of money if you're right and if your timing is right, and you don't end up giving a third of it away at the end of the year, and then a third of it away the next year, and a third of the way the next year. So it's an incredibly powerful security at this moment. I have said that I believe there will be others approved by the Securities and Exchange Commission, but so far no others have made it. If I had to guess today, I would say that there will be a Bitcoin ETF coming out by either Power Shares or there's 2 or 3 places they could come from that you can have a lot of confidence of the way they were built. And before they come out, we'll know that they're being filed. We'll follow it and we'll give you our opinion about those. But let's just assume for a second that 30 days from now, there's a new ETF on the market that exactly mirrors the movement of Bitcoin, as opposed to a trust set up the way Gbtc is. If it takes a year or 2 years for that to occur, then Gbtc will be the only way to get this exposure. And let's take a look at Gbtc in terms of what's happened price-wise, what's happened with what looked like was going to be a hyperwave and where it's sitting right today. And then we'll do some quick calculations, and we're going to talk about the great disadvantage and difficulty of timing Gbtc purchases and sales. So I'm going to ask Leah.
Ty, we actually lost your mic. Everybody in the live chat. Ty, talk for a second. Let me know if you guys can hear this. In the meantime, so Edgar's really, really interesting. Tyler, I'll be looking for you. It does stand for Electronic Data Gathering, Analysis, and Retrieval. So it collects documents, right, that details the financial and operational health of the domestic and foreign companies that have stock owned and traded by the public. And Ty,
are we back on?
You're back on. I'm just explaining Edgar really quickly.
Good.
And so it's very important if you want to really look and deep dive, what you should be doing for the equities markets, how companies are doing, what they're up to. I mean, you can really get into the minutia with these filings. And if you do come from a fundamentals background, or you want to overlay your fundamental analysis with technical analysis, which is not a bad idea, of looking into these very different systems, you'll really understand a lot about the companies that potentially you're investing in. And that's a way that's kind of my background of finance, was kind of combing through these Edgar reports and trying to find anything within the company that looked off or was worrisome for the hedge fund that I was working for to invest in. Tyler, before we go on, we have a bit of a disclaimer that we need to make that I saw in the live chat. The question is, do we or Lucid Investments have any affiliation with or relationship with Grayscale? So just a disclaimer before we go.
None whatsoever. Never met any of them, never talked to any of them, have no financial interest in it. Nor would I, they wouldn't ask me, and I wouldn't accept if they did.
There we go. All right. Disclaimer said. Here we go.
Okay, the first thing we're going to do, we're going to look at some Gbtc charts. But the first thing we're going to do is we're going to get our calculators out. And it's the easiest thing in the world. Most of you already know it. Some of you do not.
Tyler.
Yes.
We don't use calculators.
Yeah, you have to have a calculator. I've got one on my phone. Okay, here's what we're going to do. We're going to take the closing price of Gbtc today, which was $15.25. We're going to put that into the computer or the calculator, $15.25. You're now going to multiply that by 90. So 1525 times 90 is $1,372.50. We're now going to take a look at the last trade in Bitcoin, which is $89.35. Excuse me, 8,900. Somebody just had a heart attack. $8,935. You're going to divide that number we got from multiplying GBTC price times 90, which was $1,372. You're going to divide that by 8,933 now. 8,933, and you're going to get a number that says 0.153. And what 0.153 means is there is a premium on GBTC at its close today of 53.6%. So if you bought it on the close today, compared to where Bitcoin is right this second, you paid 53% premium over and above the value of the Bitcoin in the trust divided by the excuse me, divided by the number of shares in the trust. So you just paid 53% more than it was worth. If you put in $10,000, basically you paid $5,300 more than you should have. Now, you can make that calculation all day long as both Bitcoin and GBTC change. And I've told you before that the average since GBTC hit the market is around 40. It's dropped as low as about 37, as high as about 43 on an average, a mean, a median. And you can calculate it a bunch of different ways, but let's just for rounding's sake call it 40%, which means that on any given day, if you throw a dart, you should hit somewhere around 40% for that premium. But the extremes that give you that average are huge. On two different occasions, GBTC traded for less than the intrinsic value of the trust. Less than it. That's a discount. It wasn't much. It was about 2.5% at one point, just for a short period of time. It was like 1.25% for a short time. Somebody told me that there was actually on a very short-term chart, a minute chart, almost a 5% discount. I haven't been able to find that, but I'm sure they know what they're talking about. But in any case, let's just say 0 at the bottom is the lower extreme that gave you that average of 40%. But the peak is over 100%. It's about 125%. So how in the world do you get exposure to Bitcoin if the thing that you are buying has such wide variation? You've got to be right on the direction of Bitcoin, which is tough enough to begin with, either up or down, and you have to be right on the direction of GBTC. There are many times you will see GBTC going down in price and Bitcoin going up. There are many times you will see GBTC going up and Bitcoin going down. So for that reason and that reason alone, most people shouldn't be trading GBTC unless you are really concentrating. I don't find it difficult to make those trades because it's like arbitraging any two securities at any point in time. It's like arbitraging gold against silver. It's like arbitraging Netflix against Amazon or Comcast, or General Motors against Ford, or Chevron against another oil company. That's all you're doing here. But to me, there's a huge advantage if you just think about it for a moment. If 40 is the average and you see the premium at 30, that gives you a bit of an advantage as an entry point if you want to buy GBTC. I wouldn't do it. If it drops down to a 20% premium, now you're paying half of what the average is. And let me tell you what the advantage of that is. What it says is that regardless of the price of Bitcoin and its direction over the coming day or week or month, the probability is that if Bitcoin goes up, GBTC will go up faster to close the premium gap between the 20 or 30 that you're buying at and the 40 that's the average. And if Bitcoin goes down, then the probability is on your side that GBTC will go down less than if you had your money in Bitcoin. Now, that's not an extreme enough case for me to get really interested. But I've often seen the premium drop below 15%, and I've seen it on a number of occasions at 10 or below percent premium. Now I'm very interested because now, regardless of the direction of Bitcoin over the next day or week or month, the probability is that that 10% premium is going to go back to its average of around 40, which means you just made a 30% profit on Bitcoin, and Bitcoin didn't move at all. It just sat where it was. Now, the other extreme is when the premium has grown greater than 40, like we just calculated, at 53.6 at the close today. Well, 53.6 isn't that far away from 40. It's 25% higher than 40. But we have seen often, particularly in a strong bull move for Bitcoin, that premium go to 60 or 70 or 80 or 90 or 100. So a move at 53% up to 73% premium in a strong market gives you not only the growth of the Bitcoin underlying, but also a 20 percentage point move on GBTC. Now, other than playing the extremes, it does not make sense to be in GBTC. Yes, you can hodl it if that's what you would do for Bitcoin, and you're doing it in a retirement account, hopefully. And if not in a retirement account, you've already made your decision and you can hodl Bitcoin and hodl GBTC. But I would only make the purchases of GBTC at the points at which the premium is at a minimum. So that's the way I look at it. And in terms of its functionality being the only way to play a security that is very easy to get into, out of, without going through all the hassles of wallets and exchanges and having to wait for an hour or a day or 2 days for a Coinbase to actually put the trades through, and knowing how much you're going to have to pay depending on what the mempool is, and all of these other collateral problems with the crypto market as they stand today. This is a pure play other than what we just discussed having to do with premiums and discounts. Okay, let's take a look at the chart that Leah has put up. And what you're looking at is a recent 9 on the sequential trading system as it sits right now. And what that basically means in the original TD trading system, which was originally the sequential trading system by Larry Williams, is you should expect a pullback of 1 to 4 time periods. And maybe more. It could go all the way back down to another 9. It might not. It might only go one day and keep going higher. But I wanted you to look at this. We are looking at GBTC here. We're not looking at Bitcoin. And this is a very different chart than you would see if you overlaid Bitcoin on top of it. There's similarities, obviously. But I've drawn 2 parallel lines, or Leah did. Leah constructed these charts. She is getting very adept at that, more so than I am on TradingView. But what you're looking at is these 2 parallel lines, one at the top and one at the bottom. And the one at the top, I can't read that price. What is that upper line, Leah?
Sorry, Ty, I had myself, oh, there's reverb, on mute. Are you talking about the most recent?
No, yeah, the upper parallel line.
We're at 19.
Okay, that's at $19 a share. We're sitting midway between that. And now if you make that bigger, so we can go back and look at where that line goes, notice the resistance at that level. It's tremendous. On Bitcoin, we talk about 10,100 and 11,100 as being overhead resistance. But also notice the lower line that I've drawn on GBTC, or Leah drew. And what's the price on that one, Leah?
Sorry, Ty, I was mute again. Tell me, the lower line is what you're asking?
Yes.
10.
Okay.
10.1.
So you've got 10 at the bottom and almost double that at the top. And notice that for a very long period of time, both of those trend lines, horizontal trend lines, were able to engulf the price activity. Going all the way back to the original breakouts, over and over again, it tried to get above that line, finally did. Then it struggled to get above the upper line. And when it did, which obviously was in that November, December timeframe where Bitcoin was going vertical, this also went vertical. And then has come back down and found some support on the top line. And ever since has been trapped in between those 2 lines. To me, that's the most significant areas on GBTC right now. We're not going to go into a lot of details about the short term or the intermediate term, but let's take a look at the weekly chart. If you could pull that up, Leah.
Yep.
Here is the weekly chart, including the line that originally I said was a phase 2 line, although I call it a trend line because we never, in my opinion, actually got into a phase 3. And the main reason I don't believe we ever got into a phase 3 is because the time period is simply too short. Now, yes, I do understand that the volatility of this particular trust and Bitcoin specifically is many times greater than the volatility of almost any other security, particularly one that's been around for as long as Bitcoin has, 10 years. A lot of short-term penny stocks that haven't been around, that just were IPO'd. They come out and they can be tremendously volatile, easy to move up, easy to move down. And to me, all of the cryptos fall into that category, and none of them, even though there was an acceleration up off this phase 2 line to the top, when we came back down to it, it told me that it was still in a phase 2. Now, notice on the far right, the last 5 weeks. I said 5 weeks ago that Gbtc broke below that trend line, which it did. And at the time I said, if this were actually a phase 2 line, it just went away. But I'm not calling it a phase 2 line because it never made a phase 3. So what I believe the 5th candle back on this chart was showing was simply a break of the trend line, which is now reversed, and we're back above that phase 2 line. What that potentially could mean to me is that we could see an acceleration at some point above that line, and we could go into what would at that point be a phase 3 trend line. That would only happen, in my opinion, when and if Bitcoin takes out its peak at 20,000. And I believe that will happen. As you know, I simply don't believe it's happening now. I believe we are in a short-term downtrend that was in a 4-week uptrend in Bitcoin, but it didn't go far enough and is now showing signs of weakening. So that's just my own interpretation of the Gbtc chart. The important thing about Gbtc is it is going to follow up and down Bitcoin. It will do so with either a premium that's very large or a premium that's very small. But you need to be comfortable in your Bitcoin analysis before you take on Gbtc. And as I have said before, I do not consider what you're looking at as a hyperwave chart. And that doesn't matter because I do consider what you're looking at in Bitcoin as a hyperwave chart, and that is the driver of Gbtc. So we had one other chart, I believe, Leah. What was that?
Wow, such bad verb. The only two we created, Ty, but we can do one right now if you want.
I know. We had the SEC stuff, so that's fine. So why don't you go back out of screen share?
You got it.
And before we get to what we will end with, which is just a quick look at Bitcoin, what we've been looking at, we had a big down volume on the 30-minute chart on Bitcoin, and then a big up volume, and we'll tell you what we're thinking there. But I'm going to turn it over to Leah she has some questions for me on Gbtc, on things that I might not have covered, and also any of the live chat that you've got some questions on, Leah.
Sure. Let me sift through some of them. Specifics, minutia. How can an average investor buy Gbtc in a retirement account?
It depends on where your retirement account is, meaning who's holding the assets. If it's Schwab or it's Fidelity, it's very, very simple. All you do is you put your order in. and it will go right through. Now, even at Schwab and Fidelity in a retirement account, depending on what type of retirement account it is, they might ask you if you understand the risk of trading an over-the-counter stock, and you have to click a little box. Now, in some 401ks, not mine and not family members and not other people that I know, are there any restrictions against over-the-counter stocks? But there are some 401ks, so you've got to check if you are in a 401k with the plan sponsor that built that for you. And your company that is issuing the 401k has documents that they are required to give you about all the rules and regulations of what you can and can't do. I have run into one company, and I'll mention it. It's 3M, Minnesota Mining, that has a retirement plan that's in the form of a 401k, and they do not allow the purchase of penny stocks, over-the-counter stocks, and certainly no cryptocurrencies. None of them will allow you to buy cryptocurrencies, including Bitcoin. Now, that's for a 401k. If you have an IRA account, there are no restrictions in that. You can go ahead and you can simply put in, I want to buy, 500 shares of Gbtc. I would always use limit orders with Gbtc, unless you're really doing fairly small dollar amounts. And then just check the volume. The volume's big on Gbtc most of the time. But if you're trying to put in 5 or 10,000 or 20,000 or $30,000 into Gbtc, never use limit orders. If you're scaling in a little bit at a time over a period of time, then you can, but test the waters yourself and just see if you're satisfied with the kind of fills you get on your orders. So in IRAs, like regular IRAs or even Roth IRAs, and in most other plans, you can put Gbtc in. If you have 529 plans, which are education plans for children, you cannot. They have mutual funds that you can choose from, and that's almost entirely true with all 50 states. Each state has their own rules. But
Tyler?
Yes.
And for a 403B?
403B is the same as a 401k. There shouldn't be a problem with it if you can actually direct it yourself. And there are many that you can direct it. You are given flexibility because many 401ks or 403bs or 457s have as one of your choices, they will link you up to a platform like Schwab or Fidelity. They will often limit the amount you can do in your plan in those trading portions of the plan. But again, you just need to look at it and see. I have had some people that were in 401ks that would not allow it, but they would allow them to take distributions from the 401k, and you have 60 days to roll it over into an IRA with no tax consequences or penalties. And a number of people have done that because they are so intrigued by the possibilities of Bitcoin and Gbtc that they wanted some of their money to be able to be put into the space. So those are the various variations you need to check yourself. In an IRA or a Roth IRA, there are no problems whatsoever.
Tyler, we've spoken, wow, this reverb kills me, about how we do think that the ETFs are you hearing the reverb too?
It's not horrible.
Okay, sorry everybody.
It's like your head's in a wastebasket.
You know, typically. Okay, so we have spoken maybe ad nauseum of how we are excited about the ETFs coming down the pipeline, and we do think that potentially they will be here soon and they will be fantastic instruments. You've even spoken previously on this specific show about what would make a great ETF. So why do you think someone should spend so much time understanding GBTC and investing in GBTC, part one? Part two, also just a little bit more about what will happen to GBTC when these ETFs come down the pipeline.
Yeah, great question. I said before that I think the only one that has the possibility of coming out fairly quickly is a Bitcoin ETF. And that's because it seems as if the SEC has already drawn the conclusion that Bitcoin is not a security. And they've already approved GBTC in this structure that's a trust. It's not really an ETF. It acts like an ETF. It's more like a closed-end fund. We don't need to get into the details of that. But so I think that could actually happen fairly quickly. And if it does, the day it comes out and probably the weeks before it comes out, the premium on GBTC is going to drop to zero. And you don't want to be in it. Because if there's any premium, even a 10% premium, it's going to go to zero and you're going to lose 10%. If it's up where it is now to 53%, you're going to lose half your money and you could do it overnight. Why would that happen? Because why in the world would anybody want, except an arbitrageur, the premium discount problem, if what you really want is just exposure to Bitcoin? So most people will immediately gravitate towards the new ETF. And therefore, those that are in GBTC will sell their positions to get into the new ETF. And that will drive the premium down to zero. I might be wrong on that, but I doubt it very much. And I certainly wouldn't gamble with the possibility of that. You will have plenty of notice that someone has filed again with the SEC and the SEC is considering it. And while they're considering it, just as they did for the other ones that were proposed by Grayscale and by PowerShares, it did not really affect the premium for GBTC while that was going on. So there will be time to react. The SEC is not going to come out tomorrow morning and say, we've just approved this Bitcoin ETF. Why? Because they've all been pulled because the SEC denied them and they have to be resubmitted. And when they are resubmitted, that will be public knowledge. And then the process of going through the decision-making will take place. So you've got a bit of a cushion in terms of being in GBTC until that happens. Is it possible that the regulators are going to be so tied up in knots for months and months that the last thing they want to do is start approving anything in the form of a security until they've got their act together and they've got their rules in place and they've made it explicit? So is it possible that we'll get through all of 2018 without any new securities? Yes. I would think it's even probable. Is it possible we may never see another security? Yes. But I think that's a small possibility. I think they just have to work their way through it. And by the way, we've got a lot of listeners, a lot of followers who are not US citizens. Almost all of the comments I've been making have to do with the retirement account rules in the United States. Now, most of the European countries have very similar retirement account rules. I am not familiar with Japan and Asian rules. I would assume that Australia follows more closely with the UK, and Canada, but I'm not sure on that either. So everybody's got to check that out. But I think you will find that in almost every instance, what I have said about pre-tax and post-tax investing is true in the vast majority of countries.
Ty, I think a good question that I don't know. A question I'd like to ask is, who do you think that this video that we're making right now is intended for? Given that I even spoke this morning about Circle, that was acquired obviously by Goldman Sachs, and that we can trade Bitcoin OTC. So we also had in our latest vlog the conversation about ugly old goats articles and having a money management perspective in investing and the difference between investing and trading. But just very succinctly, for everybody who's listening to this video, I don't think it's for everybody to invest in GBTC. But I do also obviously believe in the power of GBTC and that it's a very interesting instrument. But who should be watching this video and potentially paying attention?
Well, anybody, we started out by saying you need to read the legal documents. Don't take anybody's word for any of their interpretations of what can or can't be done or should or shouldn't be done. You need to do that. So that's going to get rid of probably 75% of the listeners. They're not going to take the time to do it. I probably wouldn't either if I was not in this business. It's a real pain going through it. But you will learn a lot if you do. So let's say 25% of listeners take the time to do that. Still, most of that 25% shouldn't be in GBTC because of the premium discount problem. It's hard enough to get the direction of an asset class correct, using all the technical analysis with the best people that are the most experienced, giving you their opinions, and you lay your opinions on top of it. And, we're all fortunate if we get 50% of the calls right. Some of the systems are 70 or even 80% accurate, depending on whose hands are on that system. But that means that 20 or 30% of the time, the very best systems in the world are going to lead you astray, forgetting premiums and discounts. So I think it is for people that have made the decision they want to be a hodler of Bitcoin, they should have GBTC along with Bitcoin in a retirement account. Not because of GBTC or Bitcoin, but because of the tax advantage of it. And you can't get Bitcoin into the retirement account, but you can get GBTC in it. You're not buying GBTC because of the investment possibilities. You are doing it because you believe in the crypto space, and there's no other way to get it into a retirement account. And why do you want it in a retirement account? Because you end up doubling or tripling or quadrupling what someone making the same investments are going to do over time if you don't. So that would be my answer. Now, on the money management side, or let's say the hedge fund arbitrage side, I think they will continue to use things like GBTC. And if Ethereum and Ripple and the other ones that have been presented to the SEC come out in the form of an ETF or in the form of grayscale in terms of having discounts and premiums. I think the institutional traders will love that, because that's all they do 24 hours a day is make those calculations and decide when risk and rewards on their side. And something this volatile is a great way to do it. I believe that anybody, once they learn about the crypto space, learn about Bitcoin, and have a retirement account, I believe everybody should have a portion of that. It might be 1% or 2% or 5%, up to maybe 10% in GBTC. But those purchases need to be made when there's almost no premium.
Ty.
Yep.
Fun question before we finish with Bitcoin price action. So you said that everybody potentially should have an allocation in GBTC. We know that the SEC, the CFTC, they're all fumbling around trying to figure out the rules, but for the most part, they're quite pro-Bitcoin, right? So maybe a question to you is, should federal employees right now also be putting some of their retirement accounts into GBTC?
Absolutely, with all of the caveats we've just gone through. I'm not saying that everybody is in an emotional or an experiential position to hold and ride and be in GBTC. You need to, first of all, understand the crypto world. The fact that you're listening to these vlogs and other people's vlogs on YouTube and other places and following shows that you've got interest. This audience has interest. When you go home and Aunt Mabel calls you tonight, I would warn you not to tell them to put GBTC into their retirement accounts. You've got to be on top of this asset class to be in it. You have to understand the difference between Bitcoin and the other cryptos. And you know that half the people in the space disagree with the other half in the space, regardless of how smart they are, how much experience they have about the question of Bitcoin versus the other cryptos. You know that regulators all over the world don't have a clue about that relationship. So Aunt Mabel is not going to understand what the heck you're talking about. So this is designed for people that are listening to these kind of informational vlogs. And if you want to go sit down with Aunt Mabel and go through what you know, and you know the type of things she does, there are a lot of very smart Aunt Mabels out there that can beat the pants off of most of us in terms of investing at various times because of various things. So what I'm talking about obviously is metaphorical. And we're talking about a very small number of people that fall into the crowd of understanding all of these layers. And to be in GBTC, you need to understand all these layers.
Great. Thanks, Tyler. All right. Since we're going on almost an hour, actually, I think we just hit an hour. Let's talk price action.
Okay, we'll do a real quick Bitcoin. And let's pull this one up and let's hope this works well. And I think it did. This is the 30-minute chart. And I said there were two big volume spikes, one to the downside about 2 hours ago and another one to the upside. Net, we're still trading where we have all the way back with this first break of the 9,000 level. We had a second break and a brief third break of the 9,000 level. We've dropped down to 87.60 earlier today. We dropped down on this candle, 5 candles again, 5 candles ago, 2.5 hours ago, to 87.94. And we're getting some short-term signals of tops in sequential. And I did want to show you one other thing quickly, which is something that we have shown you twice before, which are 6 indicators that I have been using to determine where we actually are sitting on Bitcoin right now. And so what we're going to do is go to a weekly chart, and we're going to just go through the countdown once again. Here's the price activity below the old phase 3 trend line, which is now, excuse me, the old phase 3 line, which is now a trend line. We're below it. We are below the short-term moving average. We are, excuse me, we are below the long-term moving average, and we're sitting right now slightly above the short-term moving average for the last 2 weekly periods. But we are still growing in terms of the spread after the death cross. So we've got overhead resistance, but we are holding up so far since Sunday night. We've got a slight green candle, and last week we held up. If you drop down to the bottom, I believe this is not a positive, nor is it a negative. We're right in the middle of the RSIs on a weekly basis. But
hey, Tyler.
Yeah.
The screen isn't showing correctly for some reason.
What do you mean?
It's showing like half of it.
Really? Okay. How about this one?
Let's see. I could always throw it up on mine too. Nothing's changed.
Which half is it showing? Top half or bottom half, or
like directly in the middle to the right?
Wow, that's weird.
Do you want me to pull up Bitcoin Wisdom or TradingView? Or just speak about it? There's not too much going on, it looks like.
There's really not. Can you see the stop and reverse points right
Nope.
here? You can't. Okay. I don't know what's wrong. Sorry, folks. I will just go through without you being able to see it. My stop and reverse points, we are well below it. The last stop and reverse point is coming in at 11,392. We've got to get above that. On my next chart, I've got the Bollinger Bands. We are still below the middle band, and the middle band is turning down. We've got to get above 10,500 to get above that. That is a negative. On my Fibonacci chart, we are between the 50% and the 61.8%, which is where we were last week. And we need to get back above 10,100 in order to overtake the next higher Fibonacci number. I would call that a neutral. Our RSI is sitting right around 50 on a weekly basis, halfway between overbought and oversold, and it never got oversold, but it was overbought on a number of occasions in 2017, and as we peaked in December of 2017. So that is also a negative. And finally, the MACD is negative and has a long way to go before it turns positive. For all of those reasons, I believe that the short term is still slightly positive, but it's turning neutral. The intermediate term is negative, and the long term is negative. And I still believe we are going to see much lower prices in Bitcoin.
All right, everybody, you heard it. I hope that you were able to see it quickly on the trading view chart that I had pulled up. But thank you guys so much for watching. I have just my screen on. Let me throw you up there, Ty. And this is everything GBTC. Now, if there's still more questions, please let us know. But hopefully this answered all of your guys' questions. Ty?
Yeah, great. And any questions you have, if you take the time to read the document that we linked you to, the government document, please go ahead and ask either on Twitter or on our next vlog, or any way you want to communicate with us, and I'll try to answer those detailed questions as best I can. Thank you very much for listening.
Thank you, guys. Thanks so much for watching. Have a great day.